Now, we start off with looking at step 1 out of the 7 steps for optimal trading performance. Now, the first step is you have to design your concept and objective of your strategy. This is the most important thing before you start to even construct and build your strategy. And the funny thing is, most traders that we have seen, over 20,000 people that we have talked to all over the world and coached and mentored, is that most people even fail at this first part of this step 1, which is even deciding and deciphering or even understanding what does this concept and objective really mean. This is so critical for the step 1 of strategy building of your model. Now, over here, we're giving you some examples here. For example, a concept can look something like price does not move in a linear fashion. As most of you would agree, price moves in cycles. Bring up any chart, or even if you do not know anything about trading or investing, you will clearly outrightly say, you know what, Thiru? Yes, you're absolutely right. Price cannot move just in a straight line all the way. You cannot see that for any company growth. So that's the first point. That's a concept, right? So the concept is that price moves in cycles. The second thing you need to then establish is the objective of your strategy. What are you looking to capture? Over here, for example, you may say you want to capture 50% of phase 1 or 60% of phase 1. Whatever it is, this must be very clearly defined. Now, the second part of step 1 is looking at 6 tools at least to build your parameters. Now, what are the 6 tools that you can take your entry points from to build your parameters? As we have mentioned on the slide over here, it can be price action, it can be support or resistance levels, indicators, cycles, time frame correlations, TFC, or even news as well, the fundamentals. From the 6 tools, then you can then use that to build your parameters. One more critical thing that I must mention here is that make sure that all these tools are quantified, because if you're really trading those turning points, for example in this concept and objective of this strategy, those swing high and swing lows, as I mentioned in our previous modules, must be quantified so that they can be reproduced. And as you saw in the previous slides, you do not want to end up where most traders end up with inconsistent results which are not scalable and not reproducible. Now, the final thing that you must have for your step 1 is your money management rules. Now, as we have mentioned on the slides, you can see that the money management rules can either be on a percentage risk management, or it can be position size management, or it can be even the martingale style of risk management. There's so many different types of money management. You can always look to explore the different types out there. Now, once you have done all of this and you have written all your entry, stop loss and target parameters, all from the 6 tools that I mentioned here, aligned with your concept and objective with your money management rules, we then write them all into what we call a rule sheet or a crib sheet, okay? That would have all your rules, and all the rules must be quantified. Now that is for step 1. We trust you enjoyed our Traders Education Center tech video. To unlock the full tech modules for free, click on the link below and hit the subscribe button. Then go ahead to register with your contact details and create your unique username and password to enjoy the fully unlocked tech modules.